The latest one that you're referring to, Scott, is Tourbillion. That's founded by Jason Karp, multi-billion-dollar hedge fund. He's an SAC alum. They're reportedly shutting down amid underperformance. It's redemption season for investors who want to and are able to pull their capital out of hedge funds. This is often the month to do it, or the month that we see a lot of investors request to do it. And that's why we've seen a flurry of hedge funds over the last week really throw in the towel. Tourbillon follows news of Highfields and Criterion also calling it quits, and it's no secret that the industry is and has been struggling. Years of underperformance has caused investors to lose their patience. Many hedge funds have had to lower their fees, and the industry now has the lowest fees on average since HFR began collecting the data a decade ago. And yet, competition has never been more fierce. Assets in the industry are at a record $3.2 trillion, and 148 new funds launched in the second quarter. That averages nearly 2 new funds each day. And as one hedge fund manager texted me this week, the psychology in the industry has shifted from someone is closing, so more assets for me, to someone is closing and I wish I was done too. But the time to shut down may be ill-timed. With rates rising, hedge funds may be poised to benefit by prudent stock picking, higher short rebates, and dislocation in the market.
The old volatility is good for alpha generators, and there hasn't been much volatility over the last many
especially
years.
when much of the industry has made a significant pivot away from the fundamental analysis towards the quant model. And the quant model is very strong from a marketing standpoint. It's saleable in a 2018 world, but you need the volatility. And we thought in February we were going to see a year of volatility, and we haven't.
Let me just also, just before you go, less than a half an hour from now, we're going to get a new idea from Bill Ackman at a conference in New York City. Like at 1:10, I think he's supposed to drop his new idea. All eyes are going to be on that. It's his first new position, right, since May, lows.
Yeah, and that will be a very interesting revelation from him, who has really managed to turn performance around this year. Last I saw, they were up 16% year to date, which comes after 3 years of losses. So any position from him is something that the market watches very closely, especially for one of the few hedge fund managers that seems to really be turning things around this year.
Something tells me we're going to see you on the air in the not too distant future talking about that one.
I can't go anywhere anytime soon. We'll put it that way.
True.